The broadcast is now starting. All attendees are in listen-only mode.
Good day, everyone, and thank you for joining this series of SafePaaS webinars. This is our second webinar of the 2019 series. The topic today is monitoring your financial close process, and so it's kind of a timely topic as many organizations are going through their annual close or have gone through it recently and looking to report results or have reported results recently in the early days of this year. And we are very excited to have Nigel King, our Chief Strategy Officer, who has an in-depth knowledge of this topic at various organizations, including at Redwood Shores with Oracle. He's a chartered accountant and understands this subject matter better than most people I know. I am Adil Khan, CEO at SafePaaS, and we want to welcome you to this educational series. Without further ado, I'll turn it over to Nigel. Nigel, take it away.
Thank you very much indeed, Adil. Thank you very much for joining us. Getting on with the show here, monitoring the financial close. So this is, as Adil said, this is one of our thought leadership shows. We do this across the calendar and across the world. So please join us whenever you are able for one of our thought leadership sessions. This session here is to discuss monitoring the financial close process, which is really coordinating tasks and storing evidence in the most important internal control. Anyone with exposure to either the finance function or the audit functions of any organization knows that the financial close process is always a key control. While the close process is ostensibly run in an accounting department, it attempts to coordinate tasks across many departments in a graceful ballet from publishing the timetable to submitting disclosures. This all stems from the precepts that an external auditor has ingrained in him or her, probably while still in the womb: conservatism and accruals. Thou shalt never preempt thy revenues, and always preempt thy costs, and thou shalt always match thy costs in the period with thy revenues in the period. It is this last phrase of accruals or matching that gives rise for the need for a coordinated close process. You have to ensure that the costs in the measurement period and the revenues in the measurement period are from the same period of time. This means that all of the activities that change balances in the financial ledgers need to have a ticket to the dance: manufacturing, shipping, receiving, payables, receivables. The role that is held accountable for the close process, though, is most certainly finance. The CFO will generally stay above the fray, but the controller will be intimately involved in managing the process. The question on everyone's lips after the books have closed is, what are the results? Having some visibility into the likelihood of being able to publish on the prescribed day will allow the controller relaxed and peaceful sleep. Of course, the real nightmare for the controller and the CFO is that not all the activities have been completed or were completed in the wrong order, and the results must be restated. So what is the current state of financial close monitoring? Standard operating procedures. The increase in controls consciousness brought about by the scandals and resulting legislation over the past years has meant that companies at least have to show the process that they should be following. Standard operating procedures or process narratives have been a minimum bar to get past internal and external auditors. They scan the document looking for control points and design testing procedures to confirm compliance. The current state checklists. Some companies have distilled control activities into checklists to get better delegation and better evidence that control activities have been performed. Where financial close management is headed. The standard operating procedures and checklist model are both necessary components of a financial close monitoring solution, but they are rather static representations of the flow of work. Where financial close management is headed, workflow. What is clearly needed of a workflow automation tool is that it will notify people when prerequisite steps are complete, allow evidence to be captured, and record confirmations of complete actions in an auditable store. Most workflow solutions show users their task list, mimicking a checklist well, and they tend to communicate via email, lowering the learning threshold. Where financial close management is headed, dashboards and analytics. We should, however, not forget that the key users of this system are not auditors. They are the CFO and controller. Their information requirements are to know the probability that they will be able to publish on time, and where there are any bottlenecks or where any issues are, such that the work can be reallocated. Where financial close management is headed, balance sheet quality. Another component of the close process is to confirm the balance sheet quality through reconciliation. Clearly, there are many control accounts whose balance must equate to the underlying subledgers, and in most general ledger systems, there are facilities to confirm this on a daily basis. However, there are still many balance sheet accounts whose balances are not supported by formal subledgers and whose balance is backed by other working papers. Examples of this might be provisions for non-invoice discount or warranty liabilities. These can give great latitude to move the profit number, and their balance should be regularly verified and justified. While not formally part of the close process, balance sheet reconciliation will feed into the close process to ensure that accounts are periodically reconciled and that balance sheet quality is maintained. Where financial close management is headed, optimization. Eventually, once the close process has become stable and predictable, attention will shift on how to shorten the close process. Using critical path analysis, you can find those tasks whose dependencies chain to form the shortest time in which the process as a whole can be completed. Compressing time out of the plan can be either through crunching time out of the tasks or seeking better parallelization, examining dependencies, and seeking to allow tasks to happen concurrently. Financial close operating models. There are a couple of different models that we need to consider when thinking through the workflow. The choice of operating model really depends on the level of integration. If an enterprise wishes to keep very tight control on operations and very closely manage the back office operations, it can drive out some costs, but the subsidiaries will be very tied to the parent company. It will be harder to spin out such companies. Financial close operating models where independent subsidiaries submit a trial balance for consolidation. In the case where subsidiaries are independent, the close process may only start to come together when results are being consolidated. The consolidation between subledgers is happening within the boundaries of each legal entity. Financial close operating models, shared service centers servicing multiple subsidiaries. In the counter example, the subsidiaries may be using shared service centers for back office functions. In these cases, many companies may be processed in a single subledger that closes as a single unit. And here, all of the companies will be closed in an upstream department before the close activities start in downstream departments. The tools from SafePaaS that address these problems. First here, we have SafePaaS. SafePaaS is both a generalized workflow management tool and it is the tool upon which we have built the financial close manager. Next, we have SafeSite. SafeSite is both a generalized dashboarding and analytics tool, as well as being the tool upon which we have built the financial close dashboard. Lastly, we have the reconciliation workbench. The reconciliation workbench is an application that prompts the owners of accounts to conduct the reconciliation and to record their working papers. It allows the controller to judge the quality of the balance sheet from the reconciliation work that has taken place. SafePaaS. As a generalized workflow management tool, it communicates through email, allows deliverables to get recorded, and allows the assignee to state the outcome of an assigned task to ensure that the branching to the next action is correct. As a generalized workflow management tool, it allows many different processes to be modeled and executed, allowing the administrator to review actions completed, in those actions that are in process and those that are becoming eligible. And as a generalized workflow management tool, it allows you to tailor the processes that we deliver from SafePaaS, changing the steps, the assignees, and deliverables to match the exact fit and function that you require within your own processes. The Financial Close Manager. Financial Close Manager builds upon this generalized workflow tool to distribute tasks and to coordinate them within and among subsidiaries and shared service centers. Next, SafeSite. So SafeSite is our generalized dashboarding and analytics tool. It's using this tool that we have gathered together information from the workflow execution. So we can see processes with longest wait times, or we can see assignees with most tasks, or we can see tasks with longest wait times, or assignees with the oldest open tasks. It is also the tool upon which we have built the financial close dashboard, which allows you to see the probability of being able to bring in the close in a timely manner. Next, we have the reconciliation workbench. So we have also built an application to help monitor the quality of the balance sheet and to prompt people through the process of reconciling accounts. It also allows us to judge balance sheet quality through a number of metrics, such as what were the hardest accounts to reconcile, what are our largest unreconciled amounts, where do we have reconciliations that are not using standard working papers, and we can keep track of our least recently reconciled accounts. So in conclusion, as you can see, monitoring the financial close is vital to ensure accurate and timely information to all stakeholders. And while the process is generally managed from an accounting department, it spans the enterprise. As such, interacting with the close process needs to have very light learning requirements. But the real heavyweight users are senior managers within an accounting department that need dashboards to understand the progress and where bottlenecks are in the overall process. Only SafePaaS has tools and expertise to give the senior managers confidence that the close process is well controlled, bottlenecks have been identified, and tasks are fully tracked and auditable. And with that, I'd like to hand back to yourself, Adil, and just to check whether or not we have had any questions coming over our chat.
Thank you, Nigel, for that excellent presentation and your insight in how modern organizations are leveraging SafePaaS platform to build a better close process and moving to a more optimized state. So we've asked you to put your question in the chat box. If you can kindly, there's still time, so get your questions on your sidebar. There should be a chat box. Please feel to ask questions. You all can also later on ask similar questions through our LinkedIn group, etc. So there's a couple of questions, Nigel, that I have time to just quickly run through with you that have come in. Now, the first question is, can I change the process of financial close to fit my company? If you could please address that for us.
Oh, most certainly. I hope I had sort of drawn attention to that on the way through the presentation. But most certainly, you can tailor the process really to the exact fit that you need for the close process as you have designed it. We really are able to model any series of tasks that you have, and as well as any deliverables that you track as part of your close process. I would say that our what we have in our sort of generalized workflow management tool is extremely well adapted for the human workflow task. So if you are pulling in many people in different departments that all have their contribution to the overall close process, it's an ideal way to just, with very light learning requirements, just sort of ping them and ensure that they are making their appropriate contribution.
Excellent point. And just to share my anecdote with you, this morning I was on a call with a client in the EMEA market that had the exact same puzzle, because they use Hyperion and a number of other systems to help them do a financial close on a global basis. And being able to use the SafePaaS financial close capability really is, as you said, provides them the ability to, can provide a customer the ability to go across systems, and it's really automating the human aspect of the workflow, which is very exciting for us and our clients. So if you would like to learn more about that, please reach out to us through our social media. We'll be glad to set up a one-on-one workshop with you and take a deeper dive to better understand how your financial close process works, what are your specific bottlenecks, and how we can help you address those. In the meantime, Nigel, I've got one more question. We have time for one more. And that is the financial close dashboard part of the close monitor, or do I have to buy them separately?
Oh, that's a great question. Currently, we are actually bundling those two together. So if you buy the financial close monitor from us, that the dashboarding component actually comes with the application. But certainly that's the plan that we have at the moment. As we sort of build out more in the analytics capabilities, we might sort of revisit how we actually package that. But certainly those two are going together. But if you want to make sure that they're actually coming together, now would be a great time to be placing your order.
Okay, thank you, Nigel. And thank you, everyone, for attending our workshop today. Stay tuned for our next workshop. Normally, we do these the third week, Thursday, typically, of the month. We look forward to having you at our next session. And Nigel, once again, thank you very much for that great insight. We look forward to getting more of these topics with you in the near future. Thank you, everyone. The recording will be available. If you would like, please visit our website for further details. Thank you.